One traders, what is going on? Going to look at Cardano ADA right now since we haven't looked at Cardano ADA in a little bit. ADA on that ticker. Going to be doing a little bit deeper dive into some longer term charts, so specifically the daily, the 2-day, and then we're going to do a very nice deep dive on this weekly chart right now. So if that sounds good, you know what to do. Smash that free like and subscribe button and let's go. So starting off right now, we are on a little bit of a pullback now. So very typical, like we do see out of a lot of the rest of some altcoins, and especially we typically see this out of some other type L1 smart contract chains as well. And specifically, this does kind of mirror up similar to what Algorand has looked like. Nothing really crazy insane in terms of price performance, excuse me. And so especially notably right now on this chart is the importance of the exponential moving averages. So let's actually go ahead and turn off the 12 period right now because we can see, and this is actually applicable on a lot of their charts too, but specifically the 50 period exponential moving average has been a big point of resistance, and then even still this zone as resistance and then as resistance as well. So we have flipped it nicely from support into resistance and have confirmed and backtested this level. So we are going to be keeping our eye on both the 26 as well as the 50 period exponential moving averages, especially after we have had our little relief rally on a lot of the CPI data and the SVB news. And then now looking at a little bit more of a retracement. So pretty much, we're not necessarily thinking that right now at this point, we'll be running up and testing some of these trend highs right now, pretty much bouncing, let's see, off the top, the high was 42.1 cents. And so pretty much that is going to lead us right into our weekly chart. So do want to talk about the fact that still have the 12 period exponential moving average off on this, but even if we do turn it on, not necessarily that relevant, although it does intersect a few levels, specifically on the run before we did have our major pullback here, but also we can see that this was pretty much the only relevant test of it. But if we do in fact go ahead and turn it off, then what's really important to note is that we do have extreme relevance and reliance on both the 50 as well as the 26. And this not only applies to the current basically last year and a half or so, but basically since we have had the start of Cardano and ever since we have had a chart long enough to actually be able to print 50 period and 26 period EMAs. So even in this instance, big point of resistance blew up. Finally, once we did actually break above it, this is key and critical to note that we did pull back and find support, and then even still running up, being able to provide support all the way up this whole time as we did find our all-time high for Cardano. And then finally, in that instance, ever since we have broken back bearish below both of these levels, then we have now found it as resistance, and then most recently resistance on the 26. So a very key and important thing to note on this chart is that whenever we are below this level, the trend likely continues in that direction since path of least resistance is to that level. But when we actually do finally get enough of a move to flip that, for example, when we flipped it bearish, we went from bullish to completely bearish. And then also like we saw previously, once we actually did flip above and turn bullish, that's when we actually did see our big run. So that's going to be a very big extreme indication that we're going to be paying attention to is the 26 and the 50. Specifically, it is going to be the 50 since that's one of the big long gauges. But on this weekly chart, that is what we are going to be looking at. So that is one of the things to keep your eye on. And now specifically, let's go ahead and talk about the shorter term because like we talked about on the daily, not necessarily a lot of excitement and upside, especially for a lot of these smart contract chains, since a lot of the hype is coming into some of the other sectors of crypto, such as a lot of the AI sectors and a lot of the other names. And we're starting to see a little bit more of an emergence again out of decentralized finance and then a lot of the Web3 stuff as well. And although we do have Web3 integrations with a lot of these L1 smart contract chains, they're not necessarily branded and marketed as such. So point we are trying to make here is that we haven't necessarily gotten the excitement and hype from a lot of these since we do look at new chains specifically branded for those types of use cases. Now, one other thing I want to do that we have done for some other cryptos right now, specifically, let's talk about this bounce, because when we actually saw our low come in back at the end of the year, when we were looking at a low come in right at 23.9 cents, one of the things we do typically look for is the retracement factor on this move. So running up to our trend high, which did come in at a level of 42.1, the fact that now we're actually pulling back and retracing and still maintaining support on top of 61.8 is not necessarily the best sign, since typically we would look to establish the 38.2 or at worst the 50%. But now on the current weekly, we are looking at pulling back below that. But if we actually look left here, we can see that this level was actually a pretty nice level of closing support for about 4 to 5 weeks on this weekly for the close here. So ideally what we would love to see is this line actually be a nice support as well. And you can already see a little bit of a wicking down. So as long as the bulls can maintain that, that would be one of the cases to confirm this as support, which would lead to a little bit more of that upside push. But if we do actually break below that, that is going to signal a little bit more of a sell-off since we are going to be running down to test the 78.6 line, which is going to mean pretty much bouncing up to set a lower high in that instance. Now, so one of the things about Cardano ADA too is that if we look at where this big level of closing resistance has been coming in, pretty much right around the 40-cent line, then what we can do is actually look left and see big point of resistance as well as points of support and support. But not only that, but if we actually zoom out, we can see even right on the initial move back in January of 21 when we were getting strong bull run, big point of resistance as well. So we know it's especially relevant, especially looking all the way left, resistance and then resistance off the previous all-time high from the 2018 bull run. And so especially now looking at this price target, we know that that's going to be extremely strong and resistive. And so especially since the path of least resistance is to the downside, the fact that we are still stuck below these exponential moving averages does mean a lot more of that struggle. And even now in the event that we have seen a lot more bullish catalysts propelling the space, such as the CPI numbers and the run on the banks and things like that, that you would expect a little bit more hype. But we do expect altcoin movements to trickle in, especially after Bitcoin has its big move. But nonetheless, the dominant pressure is still to the downside, so we are going to need to look down for some of those supports. And specifically, like we talked about, the 30-cent line is going to be one of the big targets that the bulls are going to have to defend right now in order to have any sort of hope of actually bottoming out, maintaining that higher low on this pullback, and then either consolidating or running up to break the 40-cent level. That's extremely strong resistance and being able to make those new trend highs. So now we're going to move over into the 2-day chart, and again, do just have the 26 and the 50 periods because as you can see, once again, big point of support, big point of resistance, and also support, and then now big point of resistance as well. So again, on another time frame chart, so the daily, the 2-day, and the weekly, these are extremely strong and relevant lines. So even on this overall pullback, big resistance, resistance in the zone, resistance in the zone. So it's absolutely imperative that the bulls will ultimately end up breaking. Otherwise, we will still see this maintaining as that big point of resistance, which now we are back below, since ultimately on this extreme pullback, we did have a substantial break and a close below these levels, now leading to that bounce, that oversold bounce in a way that we need, confirming that resistance point. Now, looking at the 4-hour really quick before we wrap up, just to talk about the current scenario, what we have happening now is that after a very strong announcement, the rest of the crypto space took off on the CPI data, but almost immediately gave it all back, where we're actually at lower now than we were in the prior day with all of this good bullish news. So the fact that we're actually slipping on the shorter time frame charts and seeing lower lows, despite the fact that we did have some nice bullish announcements, shows that the news is not sustainable and is not propelling and conducive to a longer-term bull market. So realistically, this does just highlight how the bears are still in extreme control, being able to completely wipe out all of these gains in such a quick time period. So I'm definitely not in any spot to be making new long-term entries unless you are just dollar cost averaging. Of course, this isn't financial advice, but those are just my observations based on the strength of these moves, and especially the reliance on how the 12 and 26 period exponential moving averages are aligning. And even zooming out, looking at this 4-hour chart, you can still see just how much these levels are extremely relative based on the shorter term trends. So obviously nothing is definitive, but at this point I am still thinking that a run down to some of the lower price points and hopefully defending a higher low above the 30-cent line does seem a little bit more likely in this instance than being able to find a bottom on the near term and actually change this trend a little bit. Of course, we could see some more unexpected news that could lead to that type of scenario, but I don't think at this point that it is extremely likely. And that's the whole point and intent of technical analysis, is actually to understand possibilities, probabilities, and just being able to manage your risk overall. And so speaking of, would love to know everyone's thoughts and comments down below. Do love getting back to each and every one of you regarding the show. And also, if you did find value in the show today, please hit the thumbs up, like, and subscribe if you haven't done so just yet, because I do appreciate you sticking with me to the end. And also do appreciate all the continued love and support. As always, it does mean so much. Stay safe, take care, everyone, and I'll catch you back in the next video.